right.
Yo, what's up? It's About Life Podcast, and it's your boy Shane, aka Black Duplicate, and this topic is going to be about fixing our money situation as a people's, right? As a people, how to fix our money situation. All over the world, this technique can be used, especially over here where I'm at in America. We could definitely use it here. We need to start thinking bigger about our finances. So I'm going to show a couple ways on how you can fix your money situation. It's not just about saving. It's about making your money work for you, right? Now, I know everybody talks about this topic, so I'm not trying to be like everybody. Everybody talks all this shit, do this, and this, and all your money problems will be gone. No, it's not going to be. It's not an easy task. First things first, it's a mental thing. Right, so you gotta fix this up here, and then you can fix that, right? So we're both, but there's no magical answer. I'm just gonna show you some ways to introduce you to some ways to help you move on. Because once we fix the money situation, our finance structure, right, which is why I have crypto and NFTs and blockchain gaming, metaverse, all that stuff is ways to fix. It's ways to make income, make passive income, right? But let's say you're making passive income. Okay, Shane, I'm making passive income. What do I do with it after that? What else do I do? Because I got this money coming in, but what do I do with it? You got to protect it now. Now you got to protect the money that you have coming in passively. Let's say you have real estate or cryptocurrency, speculative assets. You're getting you got some assets in the blockchain gaming industry. You're making money from that. You're making money from NFTs, which is a form of trade. You know what I'm saying? Stuff like that. And you got this money coming in. What do I do with it? Well, you want to become your own bank, right? And I know everybody talks about that. They talk about trust. You want to open up a trust, life insurance, LLCs and S corporations and C corporations and all that good stuff. Now, I'm not going to sit here and get like straight down to business and act like I know what the hell I'm talking about. Listen, I'm obviously not a multimillionaire, right? So I'm trying to figure this out just as much as y'all are. So I'm right here with you, looking at information, doing things, and I'm using these things, and I'm seeing some of my money grow. Right, obviously it's not at a rate of making me a multimillionaire yet, but I'm working on it, and I figured I'll share some of it with y'all. Right, so I found a couple interesting videos that pretty beneficial, and I'll see what y'all think about them. Right, so the first one's life insurance. Now this guy breaks it down really easy, really simple to understand, to make anybody be able to do it. So we're gonna open this up. Hold on here. That girl right there is just talk about life insurance is supposed to be used when you're alive, and she's absolutely correct. Right? So let's do this.
No, you're supposed to use life insurance while you're alive.
So when you start off opening up a
this
policy,
guy right here got good,
have
interesting
the
thoughts.
majority of your money start off as your death benefit. Here's your death benefit right here. Let's just say you have a $500,000 death benefit, and every single month you're making premiums. And so you are putting in, let's just say, for example, $500 a month into your IUL. That money that you're putting into your cash value accumulation account inside of your policy, over time, because of compound interest, not only are you putting in money, but now you're also earning interest. So now you really start to earn a lot of cash. And after a few years, then it really starts to pile, where this is only your premium, and now you're getting all this extra added interest getting paid into the IUL. Now that you have X amount of dollars in cash value, let's just say that you want to now borrow from your IUL. Now, this represents you, this represents the life insurance company, and this represents your cash value. Now,
very interesting
stuff.
The reason
why you earn uninterrupted compound interest only with cash value life insurance is because you can take loans up to the amount of money you have in cash value. So let's just say you have $100,000 in cash value. Your premium plus the interest equals cash value. Obviously, the life insurance carrier has a bunch of money, but again, they're only going to give you a loan up to the same amount you have in cash value. So you're able to take up to $100,000 worth of loans from the life insurance carrier, or you you could take money out from your IUL. So when you borrow from your IUL, you're not actually ever touching your cash value. Your cash value is going to stay in here, continuing to earn an annual average of 15.3%. That is a 30-year historical average with a specific IUL that I structure. That is not the same for other agents. Now again, when you borrow from your IUL, you are borrowing from the life insurance carrier and you're paying yourself that money. So let's just say you took out that $100,000 from the life insurance carrier. Your $100,000 is still sitting here earning interest, and let's just say when you borrowed this money, you went and threw it into real estate, for example. Not only do you have $100,000 sitting in your cash value earning interest, you also have $100,000 sitting inside of a real estate property earning you an ROI. So now what you are doing is you are literally leveraging the life insurance carrier to spend the same dollar twice.
Now I love what he's talking about. It's a TikTok, by the way, if you want to go look into that. But I love what he's saying. But what I'm trying to figure out is, when you borrow from the insurance carrier, you have to pay that back. Which you're going to pay that back with the real estate property, I'm assuming. So now you're going to use some of the profits from the real estate property to pay that back and pay the mortgage. And once all that pays off, then basically, unless you sell the whole entire property, pay the $100,000 back and then take the $100,000. Say you sell it for $200,000. Take the $100,000 and then pay the other $100,000 to the other one. Now you got your own $100,000, and then you can keep going. So that's a way to kind of pay that back, because I know some people are going to have that thought process, which is why I want to ask myself and y'all that question. If you're wondering, okay, well, I gotta pay this monthly. How do I? There you go. That's how you pay it back, right? It's if you're doing real estate. Now you could do the same with crypto. If you have enough cryptocurrencies, you could take a loan from using your crypto as collateral. Take the loan and do the same concept. So you could do the same thing with crypto with certain protocols. You know what I'm saying? So it's the same concept. You could do it with crypto as well. Now this other person here, he got an interesting way of thinking as well. Let's make our own bank, right? Which that's kind of your own bank with life insurance in a sense, right? That's kind of basically your own bank as well. You're just borrowing from your life insurance policy consistently. And now maybe you pay that off for the $100,000, and you could just keep repeating that process over and over again and get a whole bunch of properties. But of course you got to have money to build. But you got to start that now, and so it builds up. So you have that money, in about 10 years, then you can start doing all that stuff for 5 years. However much money you have to throw into the life insurance policy. Now you're probably asking which kind of life insurance policy offers cash value. I believe it's whole life and universal. I believe I have cash value accounts attached to them. So you can look into that. Look into universal life insurance policy and whole life. I believe it's whole life. I don't know if I'm correct or not, but also look into riders and other stuff too. So don't read the whole entire policy and look into it. Ask questions. Research it yourself so you can figure out how to do that. Investopedia has really good descriptions and links to stuff like that. So if you go to Investopedia and you type in, cash value life insurance policies, it's going to give you some ideas on what to look up when it comes to cash value and stuff like that. Also look into speculative assets so you can figure out what speculative assets are. Liquid assets, look into that. Really do your research on money. Really do your research on money. And people ask, where do you start? Well, I just gave you some places to start. But this guy got an interesting thought process as well. So let's hear him out.
Let's make our own bank.
We should all create our own bank. I think we need to create our own bank. First, to set up a community trust structure.
Trust this.
And then you appoint everybody as a managing director of a trust. You set up a trust account for everybody. Everybody pools all this together. You buy gold and silver with it. You invest it and you pay dividends back to everybody in the community. That's how we could run an economic system and completely bypass the federal government.
There you go. There you go. So now the question is, how do you start a trust? Right? how do you start a trust? So you know what? Now that we're here, let's actually go look this up ourselves. But before we do that, I want to talk to you as well about Gaddafi being killed, which we'll come back to this. We'll come back to this because, you know, he was trying to put a satellite up in the sky because that's what he was trying to do. He was trying to create a global marketplace for Africans, right? Their own banking system, basically, and he was taken out for that. But we'll get back to that. I want to go and see if we can figure this out, right? Let's do some research together. How to start a trust fund. Ooh, my bad. Trust. How to start a trust fund. All right. Let's see what it tells you. Oh, well, Google says, step 1, choose the right type of trust before you set up a trust fund. Think about the purpose it will serve. Outline the details of the trust. Make it official. Fund the trust. Register your trust funds with the IRS. Right? But that doesn't really tell you how to do it. It just says choose the right type of trust. So let's see. What are the 3 types of trusts? Right? We got revocable, irrevocable, testamentary. That's 3 types of trust. Now you could take these 3 trusts right here and look up what those are, which is what we're gonna do. I'm just showing y'all how I do research and how I figure things out. Now you got this over here. This says, is it difficult to start a trust? Which we don't really want to give a hell about the difficulties of it. We want to just be able to do it. Remember, when you look up things, try to continuously stay positive. All right, let's see. What's a revocable trust? Copy. Come over here. And we're going to paste that in. Revocable trust for dummies. What is the purpose of a revocable trust? The primary benefit of creating a revocable trust is that it provides a prearranged mechanism that will ensure the continued management and preservation of your assets. Should you become disabled, it can also set forth all the of your real estate plan. Yeah, there we go. Let's see. What is a revocable trust? What does a revocable trust mean? Revocable trust is a will substitute, meaning that title of assets in the trust is transferred during the lifetime of the donor, even though the benefits of the assets are not enjoyed by the beneficiary until after the death of the donor. Right? Now this one says which is better. They're doing a comparison. Revocable or living trust can be modified after they are created. Revocable trusts are easier to set up than irrevocable trusts. Irrevocable trusts cannot be modified after they are created, or at least they are very difficult to modify. Irrevocable trusts offer tax shelter benefits that revocable trusts do not. Very interesting. But we had one more, didn't we? We had one more, which was this one right here, which they're not talking much about this one. Why is that? Why is that? Let's find out. A testamentary trust is a trust that is established in accordance with the instructions contained in the last will and testament. A trust is a that allows a trustee who is a third party to manage assets on behalf of the beneficiary of the trust. What is the difference between this living trust and testamentary trust? A living trust, sometimes called the inter-vocal trust, is one created by the grantor during his or her lifetime. Only trust is created by the grantor will. Only a funded living trust avoids probate courts. As you see how deep this stuff goes? No one bothers to really go look into all this and what all this shit means. No one ever goes and dives deep into that. Also look into corporations. What type of companies and corporations you should have? Should you have a LLC? Should you have a C corp? Should you have an S corp? Look into all that stuff. Research all that stuff. Exactly how I'm doing it now. And now, but what you should do though is click on the links to see Investopedia. I love Investopedia. They have really, really good insight on stuff. Really good. It's 100% true. I can't friggin' really tell you, but regardless, it's good to gather some type of knowledge. Now you see, Investopedia has like all this stuff here that you could just sit back and read. Now I read all this stuff when I'm at my job, and I sit back and read. See, it compares things. It breaks it down definition wise, advantages, disadvantages, all the good stuff. And just read to kind of keep you learning on that topic. You know what I'm saying? That's how I learned about assets, right? That's how I learned about speculative assets, liquid assets, all that good stuff. You know what I'm saying? That's how I learned and dived into that. In investing, how to invest, how to properly invest, all that good stuff. But this is how you just want to make sure you're doing your research, man. Just like sales, I learned some good stuff about sales, the principles of sales, all that good stuff. You want to make sure that you're consistently learning things, right? What I want to get into is taxes. I want to start learning a lot about taxes. That's going to be my next deep dive, is going to be into taxes. You must understand money and realize that it's not what you think it is. You know what I'm saying? But once we understand it, and we get all of us to understand it, then we can't be ripped off and gypped anymore. You know, you want to understand money. Now, I know this is a spiritual channel this Thursday, spirit, but this is a way to uplift our people, is to uplift us financially and wake our eyes up to what finances are. We can't just ignore finances because we hate money and we hate rich people. You can't do that. You're still going to understand what the hell it is and how to use it to your advantage, man. Because it's part of the system, and it's going to be consistently used against you until you figure out how to use it to benefit yourself. You know, you must understand knowledge is everything. You have to learn, right? So I just want to give y'all a good way to learn. And you got to be careful when you learn, or you can end up like Gaddafi. Right? Now, I can't sit here and say I know exactly what happened to Gaddafi. I can't sit here and say that he wasn't committing human rights violations. I can't say none of that. I don't know. I'm not over there. All I'm doing is just giving my insight and opinion onto situations that are being brought to me. I look into them. I see what's going on. And, hey, hopefully somebody here watching was over there and knows the exact story and can give me some heads up on what actually really happened, which is what I'm trying to learn. I'm trying to figure out the truth behind the world, behind the curtain that we're all living on the other side of, and wondering why the people behind the curtain can call all these shots and none of us can do anything to change it. So either you get on the other side of the curtain and join the team, you rip the curtain down and tear down the team, or you rise up like a phoenix amongst the ashes. You know, and that's like the basic 3 steps you're going to have. But I don't know, I just wanted to give a little quick breakdown on money. I'm not trying to do a get-rich-quick scheme like everybody else. I'm not trying to sit here and talk like I know every damn thing. I don't. I'm researching, I'm learning, and I want y'all to do the same. And so if you're following me, if you're a lifer to this channel, you're one of my lifers, I need you to understand this concept and understand all this stuff. It's very important. Finance is very important, especially if you're a man. You need to be the leader of your family and take care of your family, which means you need to understand how to run the financial structure, because you are going to be teaching your children, and you need to provide for your children. And that's the whole point, right? So I love y'all. This is Black Duplicate. It's about life. I'm not trying to talk your ear off about this. I just want to wake you up and make you research into things and get you to understand that your phone has access to all the information you need. Your computer has access to all the information you need. Use the tools wisely. Don't use them for bullshit. Use them to benefit yourself. But I love you. I'm out of here. Make sure you like, share, subscribe to the content. There's so much more coming. All right. We out.